Today, we are going to be talking about escaping the tax trap. So first, my name is Bobby Casey. I'm an international tax lawyer. I've been doing this, well, unofficially since 2001, officially since 2009. I started in 2001 doing like some one-on-one consulting with a mentor of mine. And then in 2009, I formalized it into a business. So I've been doing this for a long time. I got thousands of clients all over the world. And before anybody asks, I do not work with only Americans. Yes, I am American. I do work with all nationalities. We have a lot of experience working with pretty much everybody. I think I have a client in every European country, North America, so on. So I have 3 companies, Global Wealth Protection. We do the tax consulting and that sort of thing. Business Anywhere, we do U.S. company formation and pretty much everything for startups. And then I have an offshore trust company in the Caribbean. We do trust, offshore companies, stuff like that. So who here has ever had issues trying to figure out their tax situation? A little complicated. We don't really know, right? Everyone's like, oh, well, I'm from this country. I live in this country. I do business in this country. It creates tons of cross-border issues. And so we have a lot of issues, and a lot of us default to doing the wrong things or getting bad information. This is my disclaimers. First of all, this is not legal advice. Every one of you in this room are not my clients. I cannot give you direct legal advice unless you are my client. And also, there's a lot of you in the room, so I can't give you direct legal advice. So just keep that in mind. This presentation is not to give you direct actionable advice in that moment. I mean, you might find something like that, but it really is for you to find more information, to ask better questions so that you make sure you get your situation and your strategy properly done. Get comfortable with the gray area. Who here loves black and white answers when it comes to their tax situation? All right, see, now I've got you guys scared. You're scared to raise your hands. That's cool. Everyone wants black and white answers. Let's be honest, you're not going to get gray area answers in this space. It's just a reality. Once you leave your home country, you go live somewhere else and you're doing business in different countries, you're not going to get black and white answers. It's going to be gray area. I'll give you a couple of examples. Who here has been to Thailand? A few of you. I'm guessing while you were in Thailand, you probably did a little bit of work. Maybe you checked your email, you uploaded a video, had some client calls, stuff like that, right? Yeah, so every one of you were non-compliant tax-wise, which puts you actually in the darker shade of gray. I consider the gray zone like 0 to 10, 0 being completely black and white, 10 being you're just doing completely illegal shit. If you are working in Thailand, you're in the 5 to 7 range of gray area because Thailand has very clear rules. If you're doing work, any work of any sort, it is considered working, and you're supposed to have a work visa, and then you are supposed to be paying tax while you're in Thailand during that period of time. So pretty much all of you were in the gray zone. Who here has a bank account or a driver's license with an address on it where you no longer live? Yeah. Mm-hmm. You know we're filming this, right? So that is definitely a gray area thing because you have an obligation with the driver's license office and with your bank to update your address when you move. So this is the kind of thing I'm talking about, gray area. People get weird when I tell them they need to do gray area things. They don't understand they're already doing most of them anyway. Strategy does not mean taking shortcuts. So that kind of leads into common mistakes. The big one here really is taking advice from what I call the 3 Fs, friends, forums, and Facebook. Who here has ever looked at Facebook or a forum or something and you say, or you post or something and you say, well, I'm, I don't know, Canadian with a SaaS business and I'm living in Thailand. What should I do? And then someone gives you an answer. Anyone ever done anything like that? Of course, yeah. And what kind of answers do you get? What kind of answers do you get? You. You, woman, you. What kind of answers do you get? So bullshit answers, right? Yeah, got it. So that's what you're going to get is bullshit answers. Number 1, because the person answering you doesn't know your situation. Number 2, they're not a professional. Number 3, they just could be wrong and they could be screwing themselves up and they don't even know it yet because they just, confirmation bias. They think they're doing the right thing. For example, they might think, well, I just register a company in X jurisdiction, it's going to be tax-free. That's not necessarily the case. Or they don't consider their personal tax situation when it comes to their tax planning. That is a huge factor. A lot of people think, well, I'll just register the company in Dubai. It's a zero tax jurisdiction if I do a free zone company, and I don't have to pay any tax. Well, maybe, or maybe not. That kind of depends on your situation. And lastly, who here is still registered in their home country and still paying tax because you're like, fuck it, I don't want to deal with all this shit. Who's doing that? Yeah, I figured there was a bunch of you guys. I mean, I've talked to a bunch of you guys, and I mean, maybe it's the right thing for you depending on your income level, or maybe it's not. Most likely it's not if you're earning enough income to, be paying a reasonable amount of tax, because for the vast majority of you, it's pretty easy for you to exit your home tax system. Now, there are other countries that have some nuances where it takes some additional steps, but the vast majority of you can do that. So that leads me to, can you have no tax residency? Anybody ever heard or read or heard from the 3 Fs that you have to have tax residency somewhere? Anyone? Everyone's scared to raise their hand again? All right. Yeah, so that is patently false. For most people, it's patently false. You do not have to have tax residency. Now, it's nuanced. It requires compromises. It's a personal choice. It's a lifestyle choice. And some of you, it may not be a viable solution. For example, let's say you live in Spain and you want to do real estate investment in Spain, to get mortgages, you're going to have a legal source of income, or traditional banks are not going to approve your mortgages. In that scenario, you're probably going to want to be tax resident in Spain or somewhere so you can verify the income for that purpose. But for the vast majority of nomads who are moving around, either fast nomads or slow nomads, it is quite easy to be non-tax resident anywhere. You do need to consider where you spend time, physical presence. You need to make sure you don't, by default, become a tax resident in one of those countries. You need to consider, for your business, permanent establishment and economic substance of that business. Anybody ever heard those terms? Permanent establishment, economic substance? Yeah, they're more or less the same thing. Basically, it means where you work. So if you're like a solopreneur, it's where your butt is physically parked when you do your work. That would be your permanent establishment or your economic substance. If you have a team, and let's say you've got a whole team, I don't know, developers in Ukraine, and you've got a manager in Ukraine, that's probably where you're going to have economic substance and permanent establishment. But there's a concept called mind and management. Anybody heard of mind and management? Yeah, mind and management is basically where the management of the business operates. So there's a big mistake, a very common mistake nomads make. I've seen this one quite a lot. For very particular common mistake is people with residency in Portugal that have a company in Malta, because they think having the company in Malta allows them to not pay anything in Portugal, and then maybe they take advantage of NHR with the dividends, tax-free dividends. The problem is with that is you have EU company establishment rules that say if you have mind and management in Portugal, meaning your butt sitting in the seat in Portugal, you have mind and management, which means that company actually needs to pay tax in Portugal as a Portuguese company. And so I know a lot of people, maybe some of you even in the room, but I know a lot of people are getting away with it, but it doesn't mean it is a correct strategy. So, I won't go over CFC and control rules. Just quickly, CFC means controlled foreign company or controlled foreign corporation. That is, if you are a tax resident in a particular country and you own a company in another jurisdiction outside of that country, if you meet their determinants for control, then the profits of that company could be taxed in the country where you have residency or tax residency. So, what actually matters when it comes to registering your company? There are a million factors. By the way, I just want to apologize. I got to talk really fast because this is a lot of information to throw out in a 25-minute window. And I've got this nasty red clock here, like yelling at me, like, move faster. So I don't normally talk this fast. Like, this is like an hour-and-a-half presentation in 25 minutes. So what actually matters is a lot of different variables. many of you maybe even have come up to me just walking around in town or at lunch or something and say, where should I register my company? That's an impossible question to answer without knowing a whole variety of information, like citizenship. What is your nationality? For example, if you are Finnish and you are living in Finland and you want to exit the Finnish tax system, Finland has a 4-year tax rule that says you are going to be a tax resident for 4 years unless you go get tax residency in another country during that 4-year window. So if you're Finnish and you're just like, I'm going to leave and not pay tax anymore, you might be in for a really nasty surprise if you go back 5 or 10 years later, because they're going to want to know where you paid tax for those 4 years. So there's steps you have to take depending on your citizenship. Australians have a little bit of a similar situation because the ATO doesn't really like to let you go. ATO is Australian Tax Office. They don't like to let you go. Any Australians in here? Yeah. ATO really likes you guys. They really, really like you guys. They really like your money. So they don't really like to let you go. So there's a lot of steps you have to take to give it up. And then you've got others like Germans who basically just deregister their address and fuck off into Wonderland and they don't have to pay tax anymore. So we're not so lucky. But any Germans in here? Did you have any idea it was so ridiculously easy to not pay tax in Germany? It really is. To be honest, I'm envious. I'm quite envious. Canadians? Any Canadians? None. This is weird. All right. So other things that matter, residency status. So I grouped this together, tax residency and physical residency. They are not the same thing. A lot of people use them interchangeably. They are not even managed by the same departments in that government. Physical residency is managed by the Immigration or Migration Office. You have a clear set of requirements it takes for you to become a resident or get a residency visa in that particular country. However, the tax office manages the concept of tax residency and they don't always overlap. So for example, Portugal is a good example here. If you get a golden visa in Portugal, meaning you go buy property meeting their minimum threshold requirements, you only have a 60-day minimum stay required in the country. That does not by default make you a tax resident. Now you could, if you did other things, to become a tax resident, but that particular residence permit does not by default make you a tax resident. Whereas if you go get a D7 visa, it does have a minimum stay requirement of more than half the year, which by default makes you a tax resident. So it depends on the visa status itself. And there is some overlap between physical residency and tax residency. I do recommend everyone, even if you're not going to have tax residency anywhere, to get tax residency. I recommend you getting physical residency at a minimum. It just makes your life easier to have like a residence card and some addresses and stuff like that, just to make your life easier. And like I said, in certain circumstances, if you do need it, then pick tax residency in a attractive jurisdiction that doesn't tax you. Like I wouldn't pick Denmark for your tax residency, for example. Not ideal. Family and legal ties is another big one, especially the family stuff. So for example, I had a client, a Canadian guy, a couple of years ago, and he made a lot of money with a coaching business, a fitness coaching business. He was 7-figure net income, and he had a house in Mexico, and he wanted to give up his tax residency because he actually was spending most of his time in Mexico. The problem is his wife was a research professor at a big university, and she could not give up her job. And in Canada, you have to leave, you have to drag your kids and your spouse with you to give up your tax residency. So, funny thing, they just got divorced. No shit, they just got divorced. Now, they're still together, but they literally got divorced, and it saved him about $500,000 a year in tax. So, not a bad deal. Client location makes a big difference where your clients are actually physically located. So for example, it's not that common anymore because there's a lot of problems with them, but like Hong Kong companies, for example, I've had clients over the years that have said, I want to register a Hong Kong company for my Amazon FBA business in the US. Well, that is not a good solution because if you have a Hong Kong company, you're going to have Hong Kong banking. And the banks really like it if you do business in Asia. They don't like it if all of your income comes from an Amazon account in the US. So you've got to consider where your clients are actually located. Substance and control, I mentioned that a little bit before, where you actually physically do your work. Banking access is a big one. How do you get paid? What currency do you get paid in? What kind of banking services do you actually need? And I'll get into that when it comes to company structure and jurisdiction in a minute. And then payments, how do you actually get paid? Who here is using Stripe or PayPal for payments? Yeah, so you've got to consider how you actually get paid, because what's the most important thing when you run a business? Yeah, getting paid, right? Getting paid. So like I have clients come to me all the time, like, I'll just register a company in Belize. I'm like, oh, that's great, but you take PayPal, buddy. Like, what do you think you're going to do with a Belize company getting PayPal? You're not going to get paid, because if you look on Stripe and PayPal's terms of service, you have to look at the jurisdictions where they operate. And so if you want Stripe and PayPal, you have to work backwards from that. Look at the terms of service of your payment processing solutions. Look at the countries where they operate, and you're limited to those choices on where you register your company, because you have to have your company registered in the same jurisdiction and the bank in the same jurisdiction as your PayPal account or your Stripe account. And if you look at that terms of service, for the vast majority of you, you're not going to want to register the company in most of those jurisdictions because they are high tax countries. So if you're a nomad, registering a company in France is probably not your smartest choice, even though it is on the list on the terms of service. And then lastly, business model. You've got to consider where you register your company based on your business model. So if you are doing like e-commerce, for example, if you're doing e-commerce in the UK, it might benefit you to have a UK registered company, because it's going to make it a lot easier for you for importing goods. Same thing if you're doing e-commerce in the EU. You probably want an EU registered company, and vice versa in the US. If you're doing Amazon FBA in the US or a Shopify store in the US, it's going to make a lot of sense for you to have a US registered company, because it makes it a lot easier for you to do all your compliance things. Who here has heard of the 183-day tax rule? Come on. Now, see, I know most of you are lying here, because pretty much everybody has heard of the 183-day tax rule in this space. I'm going to tell you right now, that is a bullshit rule. It is not a real thing. I'm convinced somebody wrote a blog post like 20 years ago, and now everyone references that blog post as a factual thing, because, you know, the internet's always right. And I'm convinced this is how it came to be. I have clients in many, many countries. I have read the tax residency rules for probably 150 different countries. Not all of them, because I don't have clients in Zimbabwe and North Korea, but I have read the tax residency rules for most every country, and I can tell you there is only one country that, at least that I've read so far, that has a very clear standalone 183-day tax rule. Anybody want to guess what it is? Nope. 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 What? Nope. Nope. Ah, yes, Ukraine. Somebody's cheating. Somebody heard me say this before. It is Ukraine. It's the only one. Now, many countries do have a 183-day tax rule as part of their list, their long bullet point list of what it means to be a tax resident in that country. For example, Spain is a great example here. Spain has a 183-day rule, but they have a very long list of bullet points on what it means to be a tax resident. That is one of the many. If you own a home in Spain and you consider that your primary residence, it doesn't matter. You could be in Spain 1 month out of the year. You're still going to be a tax resident of Spain. It doesn't matter. 183-day rule. It's completely irrelevant. If you are a Spanish citizen and you go get residency somewhere else, even tax residency somewhere else, in a country that Spain considers to be a tax haven country, like Bahamas, Spain does not consider you to not be a tax resident anymore in Spain. Just ask Shakira, who just, I guess last year, settled like, I forgot what it was, $8 or $9 million settlement because she had residency in Bahamas, but she owned a home and property and all these connections in Spain. So you've got to consider multiple things. South Africa is another one. They actually, It actually says in their tax residency rules, actually in there, if you own a home in South Africa and you're on a walkabout, it literally says walkabout in their tax rules. I love that. You're on a walkabout, that you are still considered a tax resident. So this is not a real thing. You've got to really take into account what you're doing in each country. So I'm going to blow through this pretty quickly, and I'm going to work backwards. This is obviously not an all-inclusive list. Also, it's what fit on my slides. So common business structures that a lot of people, especially in the Nomad space, are using to run their companies. US C Corp. It's really good for raising money if you're going to take a company public, that sort of thing. Could be good if you're a non-US person doing e-commerce in the US in certain circumstances, depending on the situation. Anguilla LLCs and IBCs are great for holding companies, but they're not very good for operating business for the thing I mentioned before about payment processing. You're not going to get a Stripe or PayPal account or any reasonable payment processing. I put Panama on here because it's common. I'm going to recommend stay away. You're going to have all kinds of banking problems with it. I had a client earlier this year, who had a Panamanian company, got a big client in the US, and the client in the US couldn't pay him because their banks refused to send money to Panama. So he had to create a whole new company structure. I personally have had issues with Panama as well. Dubai free zone companies, everyone thinks, oh, zero tax, let's do it. Well, if you don't have permanent establishment in Dubai, it doesn't help you a whole lot. Yes, you don't pay any tax in Dubai, but if you have tax residency somewhere else, then your permanent establishment is considered in that country. So the only way you would be getting away with it is if you just don't tell the country where you're a tax resident, which is on the higher shade of the grayscale. Let's just put it like that. But it works really well if you're doing business in Middle East or in Africa or in parts of Asia. A Dubai free zone company is a good solution there. Estonian OUs. I'm apologizing in advance. I'm going to shit all over your company, but Estonian OUs are generally a terrible option for the vast majority of digital nomads. I know Estonia did an amazing marketing job with their e-residency, but it's not really a great solution for the vast majority of you. It works exceptionally well if you're doing e-commerce in the European Union, because it makes it easier for you to import goods and get VAT registered, that sort of thing. And it works if you have an office in Estonia. Otherwise, you're creating more problems for yourself than is necessary, and there are much better solutions. Yes, it works, but there are much better, easier, and cheaper solutions than dealing with an Estonian company and all the compliance issues that go with it. Oh, sorry. UK limited company, good for accessing the UK market, good for prestige, good for payment processing. The vast majority of you are probably going to find a US LLC to be your ideal solution, because in the US, if you do not have Nexus, which is a physical connection to the US, or ECI, which is effectively connected income to the US, basically, if you don't have an office or employees there and you're not actually physically working there, then you're not going to have a tax obligation in the US at all, and you only have to file informational return one time a year by April 15th, and it's a 3-page form. So the vast majority of you, a US LLC is going to be the ideal solution. Also, banking and payment processing is good. And then takeaways, let's focus on your personal situation first. Let's consider economic substance of where your business is located, and let's make sure we get you legally set up so that you don't have to look over your shoulder worrying about if the tax office is going to give you a nasty letter. So last thing is my contact information if anybody wants to reach out. So with that, I am finito.